You know those Instagram gurus flashing the winning trades, casually boasting about the 5% daily returns every single day. Yes, those. Now let me know a little secret. That's not trading. That's gambling. It's flashy, adrenalinic, and sure it might even be entertaining, but in the sense that bungee jumping is entertaining. Because is it consistent? Is it sustainable? Well, not exactly. Short here, long there, close there, reverse there, and hold. Don't forget to scalp the cheeky, cheapy reversal. Hold within what? 10 minutes of price action? Well, that's intraday. Sure. You're constantly glued on the chart, sweating every flicker of that 1 minute chart, 1 minute candlestick, whatever. So now let me ask you one thing. Are you trading or is the market trading you? And that's a good question. So that's where swing trading comes in. Fewer trades, bigger moves, more quality over quantity. If day trading is tennis, full of quick sprints and reflexes, swing trading is like golf. Measured, strategic, controlled. In tennis, you're constantly on your toes. In golf, you line up the shot, you take your time, and you aim for the perfect swing. Now, both are great. Both are great. I like tennis and I like golf. But if you like the idea of letting the market do the heavy lifting for you while, you do other things, then you're a swing trader. And think about it. Would you rather let the market work for you or instead work for the market and for your broker? Because that's what you do when you take 20 trades in a day, netting you a break even while you paid spreads left and right. You took nothing, but the broker took your spreads. Now, hold on a second. I know you didn't click this video to be lectured on the difference between the two trading styles and all that. You clicked this video to know some quality sources to get high quality swing trading signals. The problem is that out there is flowing with signal providers, so-called signal providers, who push out 50 signals a day with no rationale and explanations, hoping that something sticks. Why do they do that? Because they're not experienced. They're not experienced traders. They're kids gambling with the market, hoping to catch a win here and there so that they can lure you into their paid group where they spam you with 100 trades a day. Now, I know you know that. You've been in the jungle, I'm sure. You know there's a lot of noise out there, a lot of quantity, but very little value. So in a minute I will show you who you can follow to get something different. But hold on a second, because the key here is to understand what actually makes a real and valuable signal provider. Because once you understand that, suddenly you begin to see the difference between the nonsense and the value. And that develops a nose for the real traders. So first of all, the biggest of all, the best traders to follow openly share their analysis. This is a big one. At least for me, it's a big one. Because when traders think about signals, they think it's just text with numbers and a buy and sell recommendation. No. The real quality signals are the ones that show the chart, point out the rationale behind the chart, the technical setup, the fundamental catalyst, and all those together, like we do. A real valuable signal provider not only shares their trades, but also walks you through the thought process, the reasons why the trade is being entered in the first place. Those details are important because they give you context from which you can learn and from which you can also evaluate whether you agree or not with the trade. Because if your signal provider is just saying buy here and sell there with zero context, first, you have no context, in fact, to decide whether you agree or not with that trade. And second, that's definitely not helpful for your development as a trader. You want the why, not just the what. With that, you will also learn from the trader you're following, and you will build confidence in your ability to spot trades on your own. Second, quality over quantity. If a signal provider is pumping out 15 trades before lunchtime, that's a warning sign. I mean, there's nothing inherently wrong with that if you specifically want a trading style, but can you really follow that type of fast-paced trading? Or if you miss the entry by 2 seconds here late to the trade, now be realistic. You should want the type of trades that even if you see it a few hours later, you can still catch up with it and get into it. Those are usually swing trades. The type of trades that are designed to capture more significant moves, often hundreds of pips, like this one. So even if you get like 5 pips later from the entry, it's fine. You've got plenty of the move to catch anyway, and the risk reward is also still solid. So What I'm trying to say here is that if a signal provider shoots at you trade like a machine gun, there's something wrong there. Because, let me tell you something, the signal provider that throws dozens of trades at you, he does that for one reason specifically. It's more effective to post 20 trades a day to then capture screenshots of the profitable ones while conveniently ignoring the losing ones. They send you so many trades that you don't even remember which, what, and how. And suddenly, the signal provider is telling you about the take profits he hit, and screenshots and all that, and you don't know what he's talking about. But hey, look, he hit the take profit. Here's the screenshots of it, right? Sure. But what about those other 18 trades deep in the red he's ignoring them? Now, I know you know what I'm talking about. This shouldn't be anything new for you. So with all that said, who can you follow? Well, if you don't follow us already, you can do so in our public Telegram channel. That's where you get high quality trades, high quality swing trades like this, which is exactly what I described to you here in this video. Insightful, detailed, viable. You get the point. This is the essence of working smart, not hard. This is the essence of trading smart, not hard. Now, don't get me wrong. This does not mean that you can blindly follow trades and go all in. No. You need to always remember that a good trade idea is only one bit of the process. You have then to pull the trigger, which means you have to calculate appropriately the lot size, and you're always the one in control of your account, which means if you don't have the patience and discipline, you can still mess up. Even if you're following profitable trades, you can still mess up along the way if you size your trade wrong and so on. So remember, trading is about consistency, discipline, patience, and informed decisions that grow your account over time. So, forget a gambling mindset and now trade consistently.